anything, AMAs with investors. All three of them have been investing over a period of time in a plenty of startups, plenty of established businesses. Let me introduce you to each one of them. Right? Let's begin with Ashok. Ashok Rao is the chairman and principal investor in several entrepreneurial ventures, including Litrotech, Fibercoat, and Forest Devices, Big R.io, Manned Labs, and WC Robotics, quite a few of them. He's also the owner of Songkran, a high-end Thai restaurant in uh, Uptown Park in Houston. Member of the Goose Capital Fund and Distinguished Alumnus Award for entrepreneurial achievement from Market in the University. One of the first Indian Americans to take a company public on the NASDAQ, and that was back in 1994. In 2008, George H.W. Bush Award for its arts achievement. He has produced four award winning full length feature films, all of which have had widespread theatrical releases. Council of the Advisors of the Jones Business School of Rice University, specialties, startups, investing, governance turnarounds, public speaking, and non-profits. Today, let me bring you on spotlight. So, in fact, let me bring all our three experts on the spotlight today. Uh, Parag, Ashok, Rohit, if I can ask you all to come on video, then I can bring you on spotlight. Yes, sir.
Hi.
Yes. And Parag is also here. Great. Just give me a moment and I'll introduce Rohit and Parag also. So Rohit Bafna is the founder and CEO of 888 VC Accelerator Fund. He was in the core team of Venture Catalysts and Nine Unicorns VC, ex-Mumbai Angels Network, MS in Global Finance, Fordham University, New York. 888 VC is the cross-border accelerator VC. We invest between pre-seed to pre-series A round. They're also in the peer network. Yes. Okay. Let me continue. 888 VC are a peer network of investors across the globe. Until now they have invested in 20 plus startups. Okay. So now to introduce Parag. Parag is a seasoned technology innovator and problem solver with 30 years of experience in product development, AI, and business transformation. A graduate of IIT Bombay, he has built over 40 products across industries, including logistics, healthcare, telecom, retail, and education, consistently delivering scalable, future ready solutions. Known for tackling complex challenges with creative, out of the box thinking, he specializes in helping businesses unlock measurable value through technology and AI. His work ranges from developing advanced algorithms to designing systems that drive efficiency, reduce cost, and enable growth at scale. He has spent 25 years teaching yoga, meditation, and positive thinking, contributing to personal well being and social impact. With a strong reputation for trust and integrity and long term client relationships, he brings a unique blend of technical depth and innovation and purpose driven leadership to the stage. And Parag, can I have you back on the
I'm there.
spotlight?
I'm there.
Okay, Parag is here. Ashok, it seems Ashok has moved out of the meeting. Okay, I think he will join us shortly. So uh, let me begin with the both of you.
Voice
The
is
question
breaking.
is, what
Hemant, your
Your voice is breaking, Hemant.
voice is breaking.
Okay, my voice is breaking. Am I audible now?
Yep.
Okay. So I'll begin with a simple question. And the question is, what are investors expecting from an early stage startup? What will make you invest in a early stage startup? I hope I was
Hello.
audible. What would make you invest in a early
The
stage?
we lost the last part. Stage startup. I mean, like we added that mentally, but we couldn't hear that.
Sorry. What would make you invest in a early stage startup? Okay, I will also try and put the question in the chat so that it's easier. Even when you are losing my
No,
voice, you
no,
will be
and
able
you
to see that.
address it to addressing it to Rohit, or what is it basically?
The
So
question
that
is for both of you. The
yeah,
question, the question is for the panel to answer.
yeah, but we don't speak at the same time, so yeah, we'll have to give the
You can
token.
start first, Parag. You can start first.
Yeah. So early stage startup, for me to invest in that, I think it has to have some value proposition, and I need to see complete commitment in the startup promoters. So typically, whenever we have seen startups where they're doing job and after getting investment will start full time, is something which is a sign of failure, is as I believe. Okay, so yeah, I like to see complete commitment and a bit of, if not neck, a bit of their investment in the startup. Yeah,
Okay,
Rohit, you can
Rohit.
continue.
Hi. From fund angle, it is different. From an angel angle, it's different. Uh, Maybe I can talk about from the fund angle because I represent the fund. As a fund, we receive 1,000 startups, and we would have hardly done 12 investments in a year. Okay, so you can understand the level of filter, right? So, in a nutshell, it also depends upon what industry you are tapping at what time. Okay, what is the current state of art? So, if you ask me during these times, there's a slightly policies or processes which are influenced towards deep tech, and that's where people are looking at deep tech investments because it's need of the hour. People are investing in AI because Claude, which is built a tremendous product. So how do we compete at a level where we can build products and build global companies as an enterprise B2B company? So that is another scenario. But I totally agree with what Parag sir said. In the end, in early stage, when it is pre-revenue product stage company, uh, you bet on the team. What is their capability? Are they 100% committed? What's their background? uh, have they done the hustle? What kind of experience they had in the past? What skin in the game they bring into the picture? How much strategic involvement of an investor is there? uh, the same thing is with the founder. They also research good strategic investors, and investors also are looking for founders. It's like a collaboration, right? So there has to be a matchmaking, a certain sort of liking towards that fund, and what value both the parties can bring to each other for the long term goals, which is of course getting returns and exit. So it's a long process, it takes time, it's difficult. We speak to many founders a day, uh, but in the end, we have a certain method and criteria and thesis. So I would say founders need to research on the thesis of a fund before approaching any fund or any particular investor. What thesis, what approach we look at when investing, that is very important uh, for us to, because we as funds have written our thesis and our this thing in our websites in the public domain. So that is very important to figure out before reaching out to VCs.
Super. Great. Next, I have Ujjwal Agarwal, one of the founders here. Ujjwal, I have your question, but I would like you to ask. The first question I went ahead because the person who asked the question in the form was not present in the room. Ujjwal, will be great if you can come on video.
Hello.
Hi.
Yeah. Hi, Ujjwal.
Hi.
So, like my question is basically how much do you look into the systems present in a startup when you're investing? So if a startup is somewhat systemized or they have full ERP systems running or they are some Excel put together kiosk, how much does that affect your decision to invest? Thank you.
Uh, I believe first impression is the last impression. Uh, if these things are, for example, founders come to me and they've not filed their GST and they've not filed their taxes. So it's a minor issue which can be solved provided founder is ready to listen to it and work on those things. It's not a red flag that only because you're not preparing good Excel. But sometimes when I see founders, when it comes to numbers, they will call their CFO and they'll say the CFO will answer the questions related to numbers. That is a very big red flag. As a founder, you need to know the numbers of your business.
For sure.
Uh, uh, well, I can take your question as a red flag. Sometimes founders conflicting each other in a pitch call and not knowing the uh, like mechanism, set mechanism as to who to answer what. Uh, these are minute things, but it can be worked upon provided if the product is strong and if the business is good. So if founder is, but if let's say founder is rigid and he says I don't want to work on Excel, I'll give it to a third party who will solve my Excels, and is not taking in charge to solve those problems, then it creates a so an investor who's coming from a background and running a fund, and if you're not taking that feedback also, that is a red flag. There might be mistakes, we all do mistakes, we are human, but how much you're able to execute and solve those mistakes is where, because you have to pivot and pivot every time in order to raise and create a large corporation. That is my feedback. Yeah.
Yeah.
Parag, your thoughts?
Yeah, good feedback and some interesting thoughts I'll give you here. So the question was that a complete ERP and all systems set up at a early startup stage. If that is there, I would think that they are wasting investment in unnecessary things. So yeah, we are not looking at it, but the clarity, as Rohit clearly said that if founders are contradicting each other, there is definitely no clarity. That system has to be there, of course. But sometimes someone who may be a guru in statistics and he has come up with an algorithm and he's not so good at presentation, we think that okay, I have that strength at my place, I will complement that. So many times these things we tend to overlook. So what we expect is what is your core strength. We need your all investment energy to be going in that strength. So when I was in my early stage business, a friend who was a investor and he had invested in some 40, 50 companies. So I asked him that, like I was telling him my plan and how I'll do this, and with the first investment I'll build office. And he says, no, real estate is not your business. That office may gain, you may not gain there, but if you do your work well, then whatever cost in future the office has, you'll be able to buy it. So yeah, I mean, I prefer that more than the systems, the core strengths are really in control.
Fantastic.
Yeah,
Thank you.
does
Thank you,
that?
Parag and
Yeah.
Rohit.
Thank you.
We have a question coming up from Vishnu. He has asked in the chat, but Vishnu, why don't you come on video and actually ask your question on audio? Vishnu? Vishnu Ipli. Ipili.
Hi,
Yes.
good afternoon. I'm basically out of Abu Dhabi and now I'm in India. So I have a question. I have a startup running back home in India, and well, for that startup, I have spoken to many of investors, but I've seen them rarely coming forward because when I speak to them, tell them about my ideas, tell them about what we are trying to do, they always seem to think it's there elsewhere, you know. And why do you call it a startup? So if I call it a startup, does it have to be a fresh and new idea? Don't have to be, right? But still, investors see that it has to be an innovative idea. It has to be a new idea that hasn't been done elsewhere, and I'll promote only such companies. Now, I am a little stuck in such situations. What's your kind advice in such cases?
Uh, in that case, maybe I'll go first if that's okay, Parag
Yeah,
Jain.
absolutely, absolutely.
Yeah. Uh, would love to know what you're building and what's your core thing, and then I'll be able to give you a perfect answer. But sometimes what happens, let's say,
So, little bit of a backdrop to what I'm talking about, right? So, I'm trying to build some AI products. The AI products such as AI for supermarkets, which is you find supermarkets in every city, villages, top tier towns, second tier towns, right? So AI for supermarkets. I'm building AI for agriculture, which is and AI for pisciculture. So primarily these are the three areas where I'm focusing. And
so that's the problem, Vishnu. If you go with the three different ideas, and this sounds like you are building products for different use cases. Okay, so uh, in VCs we have to be very particular thing as to one product, one use case, one problem which you are able to solve, which nobody is able to solve, and whether that one particular use case and one problem can scale it to 100x. Okay, so let's say if you're able to solve an AI product for agriculture, and that to one particular agriculture, what in agriculture, farming, lending, equipment, procurement, e-commerce, and that too, let's say if you pick up AI for e-commerce in agriculture, that too you have to go very specific. In e-commerce, what agentic AI layer for e-commerce to help the clients to do more shopping on e-commerce. That specific when you'll go and you are able to prove that one particular use case is able to scale to a level whereby you can conquer a TAM Samsung and make it a livable product to scale it to a 10x level, that will attract a funding. Because when you're saying you are doing an AI product for agriculture, AI product for saloon, I'm just giving example, or AI product for services, uh, investor will say you're not sure what you're trying to build. You're putting yourself in three different kitty. If you are yourself not sure where you want to fly off, then why should I bet in your company? Okay. And the other thing is services is something which we as investors or VCs we avoid, because it might be a good business, but you have to tweak it, add a product thing to it, create because funding is an art. Okay, it's more about storytelling. And if you are a good storyteller with the proven product use case and a good go to market, and you are saying that this problem I'm able to solve and scale it to 10x level, and one particular problem which nobody is able to solve, or even if somebody is able to solve, I'll do it two times or three times better, and there's a big market and there's a need and a gap analysis, then investors will be interested. So you can understand in 2 minute 3 minute pitch, I change your entire scenario and how it can become an interesting proposition for investors to look at upon. So that is something VCs are usually looking at from that angle, even if from individual investors as well, right?
so,
So
Rohit, so you mean to say I shouldn't be pitching into multiple products or services? I
of
should
course,
be focusing on one area, one product, one service.
of course, Parag
Yeah,
ji.
I mean that's a general answer, but without knowing exact nature of what you are offering, will be difficult for us to commit actually. Right, Rohit? Yeah.
No, so Parag and
You
Rohit,
wanted to continue. Yeah, yeah.
Parag and Rohit. Sorry to cut you, but I want to give you a little more information so that probably you can help me where I'm going wrong. Yeah.
I think that we can take up later because there may be
Okay.
limited time.
Okay.
What
Fair
I
enough.
will do is
I have so
I
many
will give you
questions.
some generic principles. So any investor, I'm not a VC actually. Okay, my way of investment is I will do technology for somebody, um, as a part of investment or something like that. But any investor would look at the risk, kind of risk. Is there a risk involved? So what is the risk involved in something which seems common? Now your question was, if it's a common idea, does that mean it will not be able to make money? So if it's a like a potato and vegetable shop, there are 100 first also will work, but there are some where you will require something to be unique. Second thing is, I'll give you one actual example. Something in AI based video for HR as a domain, a very specific idea, a good idea. Somebody had come to me for that, with that idea, was ready to put up some money also to build that idea, and we rejected that because according to our study, Google in video AI, that time VO3 was not out, was already working on something like that, and something which such a large organization is working on. You come up with something, you make a few months of, you gain some customers, and then it gets taken over by something larger. So these also we avoid. So there are multiple things. It's not just that because it is common and um, it's not unique. But yes, unique is something which makes it stand out. And sometimes an idea which is unique also doesn't necessarily become a practical idea. So many things an investor has to look at. Yeah. Anything?
Thank you. Thank you. We have another question, but before I move on to that one, let me just give a small perspective here to Vishnu and other founders. Remember, it's your business. You have a certain growth in mind. You are looking at certain returns. But when you are seeking funding, you have to start thinking from the investor's perspective also, because now you are the product offering to the investor. The investor has to be interested in you. Why would the investor be interested in a startup to fund it? And there are two main things which and everything else follows. You should be investable and you should be exitable. An investor will make money when they exit from you, right? And they have a solid presence and the growth promise is there. And that's where Rohit also mentioned that can you do 10x and 100x in a certain period of time? Because if you cannot, then the value for the investor reduces. You might be happy with 5x growth in 3 years, an investor will not be, right? So, one, you have to very clearly demonstrate the growth, and you need to have a very strong clarity on the what, how, when of the whole structure. Okay, so with that, we will move on to our next question. Our next question comes from Digambar Patel. He's not in the room, otherwise, I would have brought him and asked him to ask his question. So, the question is simple. They are a pre seed fintech startup, and what they want to know is that they also have a very strong early user demand. They have got the wait lists and they have got the engagement, right? But they are pre-seed fintech startup, and they're looking at what are the key signals you would personally look for uh, to invest in a startup that can become a category defining company, right? So they think they can be category defining. They have got a very strong wait list. They have got a lot of user engagement, but they are pre-seed, and hence they are asking the question, what would make you invest in us? So I had asked the generic question, what would make you invest in a pre-seed, pre-revenue company? But here are a few additional parameters added. Would your thought process change, or it still remains the same as earlier? Rohit first.
Uh, for fintech, what exactly is building, I don't know, but a generic answer would be in a pre-seed, pre-product company would be product market fit, as to whether this problem exists and whether you're able to solve that problem. What happens, people start creating product and they don't know whether this problem persists and whether you have customers ready to pay. Okay. So problem statement and product market fit and go to market fit is very important. So what people do is they do pilots, they co-build, they launch pilot projects with enterprise customers, or they do some surveys, go to customers, create some WhatsApp groups, and check whether people are ready to pay or not. Okay. because your first customer is actually your first investor as well, and your first investor is actually your first customer as well. So if you're able to find out that problem, uh, depends. I'm very generic, but what sector, what industry? Since he's more fintech, now if you tell me lending is oversaturated, it has been done so much time in India, and in fintech, payments is already been explored and been done so much. You have to be unique. What you're trying to build these days, fintech is going towards AI element. Everybody is building AI in fintech, which again, there's so many platforms like that. So depends what product, what moat, what problem you have solved, and whether you have repeat customers or not. So there are a bunch of such parameters. But of course, product market fit is one such thing which needs to be taken care. Yeah.
Parag, you would like to add something?
Specific to fintech, I don't claim any expertise in fintech. I've worked with some fintech startups, and I've so when you say category defining kind of thing, if it is at the level of if it's technology at the level of blockchain technology, then yes, definitely. Just a second, I need to take a call. Hello.
Okay. So,
Yeah.
Rohit, were you in the middle or you concluded your answer before you went on mute?
No, I mean, I can see, I've seen pre-seed companies raising funds. Uh, Depends founder zealness and interesting. Like for example, one fintech company in Bangalore, I know, they were bootstrapped and they were struggling to raise because they were building a SaaS for stock market experts, and very competitive market, and small case in India, and they proved that their product was much better than small case. It's a SaaS for mentors to provide stock market enthusiasts. I'm just giving you an example. uh, with their product and use case, now within 2 years being bootstrapped, they're able to become profitable and bring more users and divert all the mentors from the big unicorn company to their company. So if
Right.
you have a right product, and if you're able to solve a particular problem, and a founder is able to know that this problem exists and nobody is able to solve that problem and I can execute this, then sometimes I tell founders, why do you need funding? You have been bootstrapped, and in fact, lot many companies in South India and Chennai, those who are building for US market, they don't raise funding. They go to
Right.
US, they build products. Zoho is a clear example. And no such big background, came from Coimbatore. He was able to build because the product was very strong. There was a big use case and there was a clear gap. So depends what problem product you are able to solve, and how matured is your product. That will also define your journey. But I know this is like one in a thousand use case. Founders have a lot of questions on pre-seed part, but startup is a hustle. You'll have to figure out a journey, and we know few winners, but we all learned in the end. That's the You always get something out of your startup. Yeah.
Absolutely, absolutely. So here's a question. It's a slightly longer one. Again, I was searching for our founder who is not in the room. So they are Misha Wash X. That's the name. We are developing a low-cost, high-impact, deep tech solution such as Protirod BioKit and advanced plasma material systems for real-world application in healthcare and energy. Now, from an investor perspective, what key factors make a science heavy and R&D driven startup investable at early stage, right? Because since it is R&D and science heavy, there will be a lot of investment required at early stage, even before they can go to market. So now and they are based in Bangladesh also. So that's another piece of information. How would you strategically balance long-term innovation and short-term revenue generation to ensure sustainability of such a startup? Because if they don't get startup, they can't really take off. If they don't take off, they don't have revenue. So it is a chicken and egg. In such a much like the deep tech or the the foundational AI startups, they need a lot of funding in the beginning to actually come to a point where something can be fruitful. So how do they balance, or what would be your advice for them? What would be your perspective on such a type of startup?
Uh, so in 2016, I invested in a 3D liver tissues company which created an artificial eye, an artificial
Wow.
liver, and it's been 10 years. They are now able to monetize, and now there is $70 million recently. It's
Wow.
it's one of the biggest 3D, and I was the one at that time. I was doing a job in that fund, so I didn't invest, but I syndicated that deal. But for such kind of ventures, you need the right infrastructure, right environment, and visionaries who have deep pockets.
Right.
Because if you are sitting in a wrong place where you don't know the stability, as well as you don't know whether this country is betting on future innovation or not, medtech and biotech is way too advanced and heavily dependent upon R&D. uh, Now government of India is pushing for R&D. They've started a fund which is R&D fund, 1 lakh crore fund, which is recently I'm part of those delegations. I met ministers, Mr. Piyush Goyal, and so I'm part of those deep tech council. uh, Even government is pushing it, but the real challenge is monetization and the market. Okay, which still we cannot beat the global markets. That is the reality. So even if
Right.
you're building it, uh, the challenge is monetization and what kind of supporters at the top level will come and support you. uh, so of course in India people have started talking about it and people are already investing it, and there's so many biotech incubators in Bangalore, Bangalore Bio Innovation Lab, and there's so many initiatives which have been pushed by government. So this depends upon what geography. I would say if you are sitting in Bangladesh, seeing the geopolitical scenario, it's difficult. I don't know what is the government doing for biotech in that region, and what is the support or grants or infrastructure you being provided. If it is not there, you have to go to the right place and reach out to the right people. And eventually I've seen a lot of deep techs flipping to the US because that's their ultimate end goal, because in the end monetization happens in the global market in Europe, US, Japan, Singapore. So biotech is very difficult. It is not easy. It requires deep pocket and connection at the top level. If you don't have it, it is very hard game, I would say. And it is not easy for every investor to understand that game as well. If you want exit in 2 years, biotech is not your game. We even don't know after 10 years that company will be able to monetize or not. That kind of risk capital is there more in the global markets. Still I would say that R&D is being pushed, but it's not easy yet in India. China invests what, $28 billion on R&D, and we just announced what, 2 or 3 billion dollar. So you can understand the difference between the kind of investment required in R&D.
Right, right, absolutely. So, Parag, the question was about early stage startups who are
Yeah,
into
I
the
heard about that.
R&D.
Yeah,
Oh, sorry.
yeah, I heard that. Yeah. So, so deep R&D and big investment is something. If somebody comes to me, I would say I don't know. How do I know the risk? So so there will be some investors. There are existing people in biotech who already know the game, who have right contacts. So they're specifically looking for these kind of investments. So you need to go to specifically those kind of startup investors or people who are interested in acquiring. It's not always that they would invest. And so let's say I knew that Apollo as a group was investing a lot, but I don't think they would be investing in a startup. They would be taking up some such thing under their own umbrella. So you have to find that, and then if you find the right one, the country should not be problem. They will take care, because these will be large people, people with bigger contacts, government connects, and everything. It's not a small game, as Rohit rightly said.
Right. Fantastic. Fantastic. Well, I do have one last question here to ask. Where is it gone? Yes, that was Mishwag. And okay, this question is again kind of repeating on the early stage fintech startup. So I think we have covered that. So thank you very much, and I'll ask for your closing comments on. I see a lot of interest and questions coming from, of course, our pre-seed startups, and yes, there's a constant struggle from an investor side. They would want more confidence in whether you will actually hit revenue, because right now you are not. What is the possibility, etc. And the pre-seed revenue founder is also struggling from their end as to I need some capital to reach revenue stage. So how do we balance this? What would be your advice first for a pre-seed, pre-revenue startup, and then in general, what would you want to advise any founder approaching a investor? So two parts of the question for the two different audiences from both your perspectives. So Rohit first.
Yeah. So I think hiring the right talent in the beginning is very important, because your team will will build uh, the biggest ecosystem you want to create, or your team um, will create the shape of your future enterprise. So right talent. And sometimes I see founders are greedy. They don't want to dilute too much. They will not give equity, more equity to another co-founder. They'll say, I'll take the majority. Or sometimes they give too much equity to advisors that they don't have any control left in the company, right? So all this business strategy should be researched, read upon before you want to start a venture. So basics of fundraising, like for example, I meet a lot of engineering guys who are good in product, but they have no knowledge on financial modeling, which is very important when you want to start a company. Legal compliance that I spoke about. Uh, in India, I'm just talking from the India perspective. Uh, the compliances are very important, like GST, TDS, employee payroll. Sometimes founders take it very lightly, and when it comes to funding and the due diligence, they reject it because they've not done the compliances in the beginning, and they pay heavy penalties. uh, Sometimes we also do not reach out the right people at the right time. We hesitate, and we even don't ask the right like amount for the efforts we put in, and we think that that our product is underselling or overselling. So right pricing is also very important. I believe underselling will not help. I believe if you have a product which can solve a problem, there are buyers in the market who will buy your product. And you just have to understand how do you monetize and create a recurring revenue business and bring growth. That is all matters: growth, growth, growth. And if you have growth, VCs and investors will chase you. So if you're able to bring business on the table and achieve the growth, and you have that zeal to make it a large conglomerate, and it's not an easy journey. You have to sacrifice a lot of things, your personal life, because when you become founder, as I said that day also, you become lonely. Uh, Being a young fund manager, I had so many friends, and I left my VC job and started my own fund. Now I realize I lost all my friends. And being 33, 34, I'm managing a fund. You have to deal with so many things. I would say I'm like a startup in a VC. I have to handle LPs, I have to handle my portfolios, Every day I receive 10 startup calls asking for funding, random calls. uh, I don't know where they get my number and they call. So that it doesn't work. You have to approach through a person who knows me, or maybe email or LinkedIn or WhatsApp before directly reaching. These are some basics which I'm trying to say. I would say startups. There are a lot of free courses available on YouTube and Twitter. Just go on X. So many people are talking about go to market, product market, fundraising tips, how to scale, how to build, how to hire. So much of cloud has actually uploaded 13 AI tools which you can use on the cloud, and you go on X and you'll be able to. It's a 5-hour course. So this kind of upgrading is required. Go and do the fundraising dynamics. Watch YC videos of pitching. I've met so many founders who are not able to tell me and make me understand what is the product they're trying to build. They're talking about too many things but not coming to the point. So these are some basic things and basic research which founders can do itself, and it is very easy. There's so many materials and things on YouTube and X. And then I would say, if you're not able to figure out things, then apply for accelerators and incubators. They're the right center. Sometimes we think we'll directly approach the VCs, but these incubators, accelerators have a ready ecosystem. They train you, they guide you. Even if you may dilute 4-5%, or you may pay some program fee, but that guidance and important is very mentoring is very important, especially in the pre-seed and early stage, where they can take your journey from X to 10x. 10x to 100x you will figure out. The real challenge is X to 10x, where 90% of the startups die. So that is somewhere. So we also run a GTM focus accelerator. So if founders are interested, they can apply to our programs. Earlier we were just investing, now we started mentoring also. And that is where I believe mentoring should not be taken very lightly. Please figure out mentors and advisors which can help you, guide you, and become your what do you call, sarthi. So that is my one feedback. Yeah.
Yeah. So just remembered there are a few posts I have written on LinkedIn about mistakes startups do with an actual startup example, and mistakes related to investment also. So I have seen some startups in desperation, they take unfair amount of low investment, and then they're sure to die, because then, like, they start and then they get choked. So correct. So a right mentoring which will guide you not to do these things can be useful. So other thing is, you should be able to stay underwater for some time. If you can't hold your breath, then we are not going to bet on you for a long race. So many startups, they expect that they have started in 1 month, they should be getting immediately a big funds, and extremely unrealistic expectations. So there is some startup who has done something in AI, and he tells me that, yeah, but we are expecting 200 million valuation, revenue nothing, proven customer not a single one. Having one use case or one your pilot project is also a confidence building exercise. If somebody has a pilot project and a major customer who may not be paying a big amount but has accepted to do a pilot with you, they're taking out time, they're putting their team along with you, is a good proof that your system works and may have some merit. So you should be able to hold on to a level till you have something to prove. Unless you have something which requires um for the initial first customer also, you require a very significant funds which is out of your means, then it's a different story, but otherwise you need to hold on till some time. So you can feel free. I don't remember exactly the contents, but then uh, there is one post for investors that while investing in a tech startup, take look at these steps and do these pre-checks. That is one. Then for startups, what should they do? for getting into. So I have written about MVP also. There are very big misconceptions about MVP, minimum viable product. People think that okay, a form is there, things are working, and it has to be minimum viable, attractive product, attractive to investor, and you need to at least do that much effort or that much investment till that becomes attractive, and not just a form that works. So I think, as I don't remember everything, but feel free to search for my startup related posts on LinkedIn.
Thank you. Thank you, Rohit. Thank you, Parag. Those were great insights for the founders out there. And I mean, unfortunately, Mr. Ashok, he joined the meeting, but somehow he lost connection and was not able to join. He would have had
Voice,
a
voice,
different
voice. Your
perspective
voice.
on this
Can't
my
hear
voice
anything.
today. I am on my. It's not working. I'll try some other thing, but I am on my home Wi-Fi today, and if there is an issue, I'll
Maybe
try changing the connection.
try switching off video. Sometimes it helps.
Yeah, I'll do that. So I'll quickly. Okay, so as I said, extending my thank you to Parag and Rohit, and also to Ashok sir, he joined us but couldn't continue. We'll move to our next segment, which is
No, no, no.
like
Can't hear anything. Hemant can't hear anything.
Okay,
Sometimes
let me.
it's like the speed of your voice increases like into 5x.
Yes, I can
Yeah,
understand.
there is a lag.
Let
So
me.
yeah.
I'll switch to my phone data. Let's see if that works.
Yeah.
Okay, mic check.
Yeah, yeah. You're better.
Better?
Yeah.
Okay. I guess my phone connection is better than my Wi-Fi today. Okay, so